Good morning, everyone. It is Thursday, 8th January 2026. Welcome back to the channel. If you're looking for the most detailed breakdown of what just hit the global markets in the last 24 hours, you are in the right place. Yesterday was a day defined by political shockwaves. We saw massive geopolitical pivot in Venezuela that sent oil prices tumbling, a direct attack from the White House on the defense sector that erased billions in market cap, and a distinct rotation in the crypto markets. While the tech sector tried to hold the line, the broader market is flashing warning signs as we head toward Friday's big jobs report. Let's dive straight into the numbers. We start with the US close from yesterday, Wednesday, 7th January. After setting fresh all-time highs earlier in the week, Wall Street took a breather. The rally stalled as investors digested a flurry of new political risks. The S&P 500 closed down 0.34%, finishing at 6,920.93. It briefly touched a record high intraday before pulling back. The Dow Jones Industrial Average was the heavy loser, dropping 0.94%, shedding nearly 1% to close at 48,996.08, dipping back below the psychological 49,000 level. The Nasdaq Composite, however, bucked the trend. Thanks to persistent strength in AI technology stocks, it managed to squeak out again, closing up 0.16% at 23,584.28. Moving across the Atlantic to Europe, we saw fascinating divergence in yesterday's session. Germany's DAX was the standout performer, surging 0.8% to smash through the 25,000 barrier, closing at a fresh record of 25,106. France's CAC 40, however, flatlined, finishing down a fraction at minus 0.04% to close at 8,233.92. The UK's FTSE 100 took a hit, snapping a three-day winning streak to close down 0.74% at 10,048.21. Now, looking at today's action in Asia, this is Thursday, 8th January trading. The negative sentiment from Wall Street has clearly bled over. Japan's Nikkei 225 is facing heavy selling pressure, down roughly 1.6% to the 51,100 level. Tech heavyweights like SoftBank are dragging the index down. Hong Kong's Hang Seng is also struggling, down 1.2% to around 26,140. China's Shanghai Composite, however, is fighting the trend, trading flat to slightly positive, up about 0.08% at 4,087. Now, let's talk about why the markets moved this way. The single biggest driver over the last 24 hours has been the geopolitical shockwave coming out of Venezuela. Following the capture of former President Nicolás Maduro by US forces earlier this week, the geopolitical landscape has shifted overnight. President Trump took to Truth Social yesterday to announce a massive deal with the interim authorities in Venezuela. The president stated, "The interim authorities in Venezuela will be turning over between 30 and 50 million barrels of high-quality, sanctioned oil to the United States of America." This was immediately followed up by confirmation from US Energy Secretary Chris Wright, who announced that the US would effectively control future sales of Venezuelan oil and that sanctions would be reduced to allow this flow to hit the market. The market reaction was instant. The prospect of 50 million barrels of supply hitting the market sent crude prices tumbling. WTI crude dropped 1.7% to settle around $56.15 a barrel, dragging the entire energy sector down with it. But oil wasn't the only sector receiving a political correction. We saw two other major sectors rocked by comments from President Trump. First, the defense sector. In a separate post, the president severely criticized executives at major defense contractors, specifically naming Raytheon for production delays and cost overruns. He didn't just complain. He issued a threat to sign executive orders prohibiting these companies from paying dividends or buying back stock until production issues are resolved. As you can imagine, this sent shockwaves through the industry. Shares of major defense firms like Lockheed Martin and RTX sold off sharply, acting as a major drag on the S&P 500. Second, the housing market. In yet another market-moving comment, the president suggested a ban on Wall Street institutions buying single-family homes. He framed this as a move to protect young homebuyers and the American dream. While this might be popular on Main Street, Wall Street hated it. Blackstone, a major player in rental housing, saw its stock slide. Homebuilders like D.R. Horton and Pall Group also dropped over 3%, as investors fear that removing institutional buyers will lower demand and prices for new homes. Amidst all this political noise, we did get some actual economic data. The ADP employment report for December was released yesterday. It showed the private sector added 41,000 jobs. This was slightly below expectations and indicates a labor market that is bending but not breaking. Why does this matter? Because tomorrow, Friday, we get the big one, the non-farm payrolls report. The market is currently pricing in a soft landing, but these softer ADP numbers have investors nervously hedging their bets. If tomorrow's report is too weak, those recession fears could come roaring back. We also heard from Federal Reserve Vice Chair Michelle Bowman yesterday. She focused her comments on modernizing bank supervision and regulation. While she didn't drop any bombshells on interest rates, her tone suggests the Fed is still very much focused on stability in the banking sector, especially after the bank stock sell-off we saw yesterday in the Dow. Finally, let's look at the crypto markets, where a very interesting rotation is happening right now. Bitcoin is showing weakness. It has pulled back from its recent highs and is currently trading in the $90,900 to $92,000 range, down about 0.8% to 2% depending on the exchange. However, the money leaving Bitcoin isn't leaving the crypto ecosystem. It's moving into high-performance altcoins. Ethereum is outperforming, up 1.67% over the last 24 hours, trading around $3,267. Solana is also showing strength, up nearly 2% to trade around $140. Analysts are pointing to AI fatigue in the traditional stock market, potentially pushing capital into AI-adjacent crypto projects, while Bitcoin takes a breather after its massive run-up. So, to wrap up, US markets are mixed, with the Dow dragged down by defense and banks, while tech stays afloat. Venezuela is the big macro story. Expect oil volatility to continue as those millions of barrels hit the market. Political risk is back. Trump's comments on defense and housing prove that a single post can still move billions in market cap. Crypto is seeing a rotation from Bitcoin into Ethereum and Solana. All eyes are now on tomorrow's jobs report. That will be the deciding factor for whether we end the week on a high or see a deeper correction. If you want to stay ahead of tomorrow's critical data, make sure you subscribe and hit the notification bell. I'll be breaking down the non-farm payroll numbers the moment they drop. Thanks for watching, and I'll see you in the next one.